Sensex and Nifty decline after hitting record highs in early trade. The Sensex drops over 600 points. The Nifty closes around 22,300.
Tata Sons unlikely to go public in the foreseeable future. That's what puts the stock under pressure in today's trading session. You had Tata Group Stocks that pulled back a considerable bit.
Bank stocks see profit booking. Bernstein turns bearish on PSU banks but expects stronger earnings from private banks. CLSA flags challenges on deposit growth and margin recovery, specifically for HDFC Bank.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points that you needed to track today and get you set up as well for tomorrow's trading session. I'm Marshall D'Souza. Joining me as always, my colleague Surbhi Upadhyay. Hey Surbhi.
Hi Nigel. Well, plenty of caution to start the week and a fair amount of red on the screen. So of course, we've got a lot of ground to cover. We'll tell you all about today's decline, the big newsmakers and a lot more. But just to kick things off, let's put the decline in context as well, because what we had was a decline not just on the large cap screen, but on the mid cap screen and specifically on small cap. So the whole story was about the continued sense of caution in the small cap and the mid cap market. So, where did it come in from? On large caps, the issue really was banks, and we'll talk about that as we go forward. But on the broader screen is where it was really playing out. That's the Nifty for you, and a large part of that decline is thanks to the fact that banks weren't performing. There's the Nifty bank for you. But if you, talk about the specifics, and as the second headline told you, some of the brokerage commentary was not very, optimistic on banking. Mid caps and small caps. Now, what is the issue over here? It's very, very clear that these mutual fund stress test results that will be declared by the end of this week, that are making the market perhaps a little nervous. And then you have the year-end phenomena playing out. In general, some profit-taking in pockets of the market which have worked very, very well. For instance, PSUs, etc. So largely speaking, fairly cautious start as we kick things off. But Nigel, all was not lost. There were some pockets that were working all right as well.
Well, that's right. The problem for me is that the Nifty ended virtually at the low point of the day.
Yeah.
We went to around that 22,350 odd mark till the final hour of trade, and we bounced off that numerous times. But the last tick was at the day's low, and that's always a worry. The problem from the word go was the Nifty bank. You can't have your star batsman in there that's actually under pressure from the word go and struggling to get off the mark. So from the word go, if you just take a look at that, any kind of bounce on the Nifty bank got sold into. And the pain pocket, you'll say the Nifty ended with a cut of closer on 0.5% or 0.6%. So what's so bad? Because the mid cap index was pretty okay. But if you look at the small cap index, that'll tell you the picture. There was big selling pressure out there. The smaller pockets of the market did see a lot of selling in today's trading session. That's the mid cap index. No great worries out there. The small cap index, that was down close to 2%. And the advanced decline ratio will tell you, at the start of trade, for the first 20 minutes or so, you had more number of stocks advancing than declining. But towards the end of it, those lines crossed and they went very, very further away from each other. So today your portfolio will not be feeling good because of that graph that's on your screen. Way more stocks declining in comparison to the number of stocks that were advancing in today's trading session.
Absolutely. That's something you really can't ignore. And we'll talk about this as we go forward on the show. So let's tell you all about the lineup today. Well, we'll, of course, kick it off with the key movers. Lots of those movers on the red side of the screen, but some green as well. So we'll have Vivek join in with all of the details there. Then some key stocks in focus today. One of them is InterGlobe Aviation. Sudarshan will join in to talk about the big block deal that happened on this stock. It was in focus and in news throughout the day. Last but not the least, we'll, of course, delve into all the key events to watch out for tomorrow. But first up, let's talk about this decline in a more granular way, talk about the stocks that moved. Vivek, over to you.
Well, absolutely. Like you mentioned, the Nifty bank, the small cap index was something that kept the sentiment subdued throughout the trading session. But, some sectors, some pockets of the market did do well, some pockets of the market, especially in the defensives. So the first set that did quite well was the hospital stocks. Remember, last couple of weeks on the back of news flow regarding standardization of rates, the entire pack fell. But today, a lot of them saw significant bounce back. In fact, Narayana Health up over 7% in the session. Moving on, even the healthcare pack, so even the pharma pack did quite well. In fact, the top 5 large cap names or the top 5 pharma companies in terms of market caps all of them ended with gains, not significant gains, but all of them in the range between 0.5% to close to 2%. The other stock on the radar, or the other set of stocks, was the entire capital goods pack. So they too saw quite a bit of positive sentiment, aided by the fact that ordering activity continues to remain robust, especially when looking at Kalpataru projects, KEC International, both of these stocks ending over 5% even in today's trading session. The other stocks too, the big names, the big large cap capital good companies too managed to end the session with some gains. The next stock is NLC India. Today was the day for retail to go ahead and subscribe to the OFS. The cutoff price too was quite strong, and along with that, some positive news flow too. So on the back of that, NLC India is the stock we're talking about today, ended with gains of over 6%. The next stock, Torrent Power. Every time there's news flow in this particular name, the stock does see significant reaction. Today, a PPA with the Maharashtra Discom cooled off from the day's high, but despite that, this is positive, and stock on the back of the renewable energy arm of the company getting a PPA did see some up move. Aztec Life Sciences, again, in the broader end of the market, is one that we didn't discuss too much, but the stock gained almost 8%, aided by very strong export data. So that is also something that worked out. But on the other hand, you did mention banks, you did mention small caps, but it was one particular pocket or one particular group that did see significant profit booking. It was expected given the news flow over the weekend, but have a look at the entire Tata Group stocks. In fact, Tata Chemicals taking it on the chin, down over 10%. All the other stocks too that rallied in the week gone by did see a bit of profit booking. Couple of stocks, news regulatory action on these stocks, those stocks too, important to note, did see significant selling pressure. JM Financial down 9%. IIFL Finance, that particular stock too sold off after even more regulatory action. And the last stock, Gensol Engineering, this particular stock, a lot of worries on the name in terms of the price action, but in the last 8 to 10 trading sessions, the stock has given up over 20%.
Thanks a lot for that, Vivek. Nice crisp list that you brought for us. Well, let's get in our experts who are joining in on the show. Shilpa Rout is going to help us out with the technicals, and we have Anand Tandon who's going to help us with the fundamentals. Shilpa, let's go across to you first. The markets today ended at the low point of the day. At what level would you be changing this positive stance on the Nifty? Today we ended at closer to around 22,330 odd. What's the stop loss if you're holding a long position?
Talking about the indices, yes, we saw some sort of breather today coming in, but then again, this is also on expected lines. We have seen that rally. Nifty has been making new highs day after day. So this sort of little breathing movement, I guess this is a very positive thing. So for me, this 22,200 levels will hold very crucial. And if this sustains, then yes, you will see 22,700 to 22,800 coming in. So a very important day, a couple of sessions more to witness. 22,200 should hold on the closing basis. Talking about Bank Nifty has a good support at 47,000, and we were towards the lows of 47,200 today, I guess. So that is where we've seen that index holding as well. So if this holds 47,000 zones, then again towards 49,000 is something that we can look forward to.
Okay, got that, Shilpa. Thanks very much. Anand, just your overall sort of thoughts on the market and the kind of cool-off we're now seeing in the mid and specifically the small cap space. What do you think? This is till now what has happened is that we have one or two of these red days, and then immediately the buyers come back. Is that a trend that you think will last?
It will last for some more time, but the question is whether that is something that you should be playing for. I would argue not, because the last few percentage points are the most expensive, because that's when the market starts to turn, and before you know it, especially if you're a mid and small cap investor, the liquidity vanishes. You were mentioning a while back that SEBI, for example, has started to look at the time that we take for even the small cap mutual funds to exit their position. Point is, you're looking at what what volume do you expect that they will be doing? So if you have to liquidate 10% of your portfolio, what percentage of market volume would that represent, especially when the market volume itself will shrink up as soon as the market turns negative? So it is certainly, with valuations being what they are, mid and small caps have done exceedingly well. They are also more pricey than some of the large caps. And it is not as if the situation is such that they are generating or are likely to generate going forward stupendous numbers compared to what the large caps will do. It will be in the same range. So at this stage, certainly the market your portfolio should be a lot more circumspect. You should be a lot more liquid names. So mid and small should certainly be cut back. Even on the large cap, no particular urgency to be rushing into it. All of them are very well priced and aggressively priced. So you can wait to see wherever the falls happen and pick it up there. Basically, what I'm saying is that the go-go market for last year now needs to be applied with a little more caution.
So a fairly cautious note you're striking there, Anand. Good to hear that actually in this sort of a market. Well, let's focus on one of the big stars of last week. That was Tata Chemicals. It rallied close to 40% over the last 6 sessions. And the reason which was cited from a report coming from Spark Capital, which suggested that the value of Tata Chemicals holding in Tata Sons was responsible for some 80% of Tata Chemicals' market cap. Basically suggesting that the intrinsic business was very cheap. You know, last week on Friday or on Thursday, Prashant had highlighted that if you look at the numbers post this rally, guess what? Tata Chemicals FY25 PE had moved up to nearly 18 times. That compares with around 12 times. Why was the market focused then on Tata Sons? Well, that is because Tata Sons was classified as an upper layer NBFC in September 2022, which meant it has to list within 3 years. That is by September 2025. Basically, a year and a half from now. Now we learn from sources that Tata Sons listing in the foreseeable future is unlikely. Tata Sons is considering multiple options to comply with RBI upper tier NBFC norms. Options include reducing debt and hiving off Tata Capital could also be considered. Tata Sons, well, they offered no comment when we reached out to them for a response to our story. For the Tata Chemical stock, well, this is clearly negative news from a price action perspective, and that's why that stock got knocked back today. Anand, from the Tata Group stocks, you know, last week they all had a great run because of this news that maybe Tata Sons gets listed. But today, a lot of them pull back. From the entire pack, you can, you know, if you have a view on Tata Chemicals, then well and good. But any of the other names, because all of them did see a lot of selling pressure, whether it was Tata Power, Tata Steel, all of them.
Well, first of all of them have had stupendous runs over the last several months. So, you know, there is a reason now for them to pause and to cut back. Certainly, Tata Chemicals, if you know, as you mentioned, if it was Tata Sons and that is not happening, there is no particular reason for the company to do exceedingly well, especially the kind of price rise it has seen. It should go right back to where it started, perhaps even lower. It's, after all, a commodity player, and there is no particular reason why you know, you will expect to see any great margin increase. There was a lot of activity around the Tata Consumer and Tata Chemicals also when some of that portfolio rejig had happened and so on. You know, it's finally you have to look at the kind of business they are in. They are making base chemicals. Nothing much will happen there. Among the companies that obviously are doing well in the Tata Group is the big one, the TCS, companies like Trent and so on, and of course Titan. So it's really the consumer-facing side which is doing well. TCS, you know, you could take a view that it will grow somewhat a little better than the rest of the pack. However, there are challenges that the generative AI is producing on the services company. And I think, you know, there is still some upside, some headwinds to be taken care of over there. I can't see myself buying Trent at any stage at this pricing because we are looking at something which is at 130. And no matter what kind of growth you factor in, I don't know whether that kind of pricing is justified, which pretty much leaves you with the jewelry business. Tata Motors, of course, can be interesting after it splits, but for now it is fully priced, including the fact of the split. Once it splits, however, you would find that because of better focus on the separate businesses that will emerge, it is likely that some of them will gain market share. So for now, overall, I think it still falls on the same problem that I've been saying for some time, that if you were to look at the cash flows being thrown up by most of the businesses in India, frontline or otherwise, I don't see major opportunities of mispricing that are visible to me.
Okay, that's spotlight on the Tata Group. Went up like anything, and then today was a day of cool off. Let's now focus on one more stock that was in the news today, and that is InterGlobe Aviation. The parent company of Indigo rallied over 3.5%. But this after an early decline. Why did the decline happen? Because nearly 7% of the company's equity, worth over 8,000 crore rupees, changed hands today on the stock exchanges. We have Sudarshan joining us. Sudarshan, I mean, you were actually telling us in advance that this block could happen, and it did. So what more do we know at this point?
That's correct. So Indigo was in focus today, and the stock closed the session as top mid-cap gainer following block days of nearly 7% equity. And the stock surged 7% from morning lows and closed the session 4% higher and is now less than 2% away from the record high. Of total 7% block deals, promoter Rakesh Gangwal was likely the major seller. He is likely to have sold 5.8% equity at an average price of rupees 3015 per share, which is higher than the floor price of rupees 2925 per share that was set for the blocks. And following this block deal, Rakesh Gangwal's holding in the company will slip below 20%, and as of December 2023, his holding was around 25%. Also, for another tranche of stake sale, there will be a lock-in period of 150 days if Rakesh Gangwal wants to sell further stake.
Okay, got that. Thanks, Sudarshan, for the update over there. Let me just ask Anand. Anand, any interest in InterGlobe? I mean, it's a business which is not very easy to be in, but what's going for, I think, airline companies is the fact that the sheer volumes, the sheer number of people, and a lot of pricing power now, considering we have lower capacity up in the skies.
Absolutely, and I think along with the lower capacity is the fact that one of the two duopoly manufacturers of aircraft seems to have got their wheels off literally. So, with Boeing not being able to produce quality and, having problems with being able to produce whatever they are, already have order books on, we're pretty much left with a situation where the ability to add to the fleet is also significantly restricted for most players. And you would expect to see that, even the rollout that one is expecting to see from the various orders that have been placed will be perhaps lower than what was earlier anticipated. So slow addition to supply, not too many players in the market right now, and clearly a vengeance of people returning to flying and going around in terms of tourism and their businesses certainly gives them some pricing power. So for the near term, I think this could be the sole player, because none of the others seem to be able to get their act together either.
Okay, all right. Let's focus on the sector of the day then. The Nifty Bank was down close to around 1% in trade today. And there were a couple of interesting brokerage reports. Bernstein, they believe that it's time to move back to private banks. They highlight that in the last 3 years, the public sector banks, well, they've outshone the private sector banks. And that's because of their superior earnings growth and also narrowing of the growth gap. But now Bernstein believes that they see a less promising trajectory for PSBs as they struggle with the weaker deposit growth, lower liquidity buffers, which could result in weaker earnings versus the private banks. Hence, they've downgraded SBI to market perform, and the target price, though, is at around 780 rupees. CLSA, well, they have a view on HDFC Bank. They say that there are twin challenges on deposits, high ask rate and a tough environment. And they say that the challenges on the deposit accretion to manifest in lower loan growth. They think that the NIM recovery will actually be now U-shaped in comparison to V-shaped. Hence, they're trimming their estimates for the next 2 years by around 5%. And they have downgraded the stock to outperform from buy earlier. And so the target price as well has been trimmed down. That's up for you on the screen. Shilpa, before we let you go, let's ask your view on both these two. Well, they are both the pillars, right, of the Nifty Bank. SBI has been a big outperformer. Technically, how's it looking? And HDFC Bank, maybe it's getting support at lower levels, but it's lacking the firepower to move higher. Your take?
Yes, rightly said. HDFC Bank definitely is lacking that upside momentum that it needs to go on and cross 1480 zones. Right now, again, trading at around 1420 odd levels. I believe the support again lies at 1380, which is very crucial. So that declines to a 1380 will be the ideal place where one can again go long for targets of 1460 to 1480. And only a decisive move past 1480, we will talk about higher targets of 1550 to 1600 zones. Likewise, talking about SBI, yes, SBI trading at around 770, 775. It is still having a very strong, base on the charts for move towards 820. So on any declines towards 745, I believe again is a good chance to enter long targets of 820.
All right, Shilpa, got that. Thank you very much for all the advice today, and we'll thank Anand also on that note. Good to have both of you on the show today. Well, with that, let's quickly move on and tell you about some of the corporate commentary that we got. Cholamandalam Investment has been underperforming this year, down around 10%. We, of course, caught up with the management, the president and CFO, who said that loan growth will stabilize at 30% on a yearly basis in FY24 and net interest margin at about 7.5%. Meanwhile, Jasbir Singh, chairman and CEO of Amber Enterprises, says that the company is targeting FY25 margins to be around 7 to 7.5%. and will improve that level even further in FY26. He added that their return on capital employed will be at 19 to 21% in the next 3 years.
We also had a chat with Mr. Thiagarajan, the managing director at Blue Star, who's expecting a good summer going ahead. So he estimates that the industry is looking to grow by around 20%, but Blue Star will grow at around 25% in the first quarter of the next fiscal, indicating that he is looking at upping his market share from around this 13.5% to around 15% in the RAC market. Well, with that, it's time for a short break. Top market events to watch out for on the other side. You stay with us.
Welcome back. You're with us on Markets Forward. SEBI Chairperson Madhvi Puri Buch today made certain important comments about the extent of perhaps risk that could be building up in specific parts of the market. She was referring to mid and small cap funds and the need to undertake stress tests by the mutual fund industry. The results of these stress tests will be made public by the end of this week. Just hear out the SEBI chief.
There are pockets of froth. Navneet, that was the phrase you liked, you preferred. Segments or sections of froth in the market. So, some people call it a bubble, some may call it froth. The question is, it may not be appropriate to allow that bubble to keep building, because if it keeps building, then when it bursts, because a bubble will burst, by definition bubbles burst. So when they burst, they impact the investors adversely. That's not a good thing. So yes, that is also true. But are there others where the valuation parameters seem to be off the charts and not supported, by fundamentals at all, and completely appearing to be, as regulators like to call it, irrational exuberance?
Okay, so the regulator is guarding against froth and irrational exuberance, but Nigel, not just in the mid-cap and small-cap fund sort of arena, also in the SME market. We got a very clear sort of indication from the SEBI chief today that there will be more, guardrails that will be put in place to ensure that investors don't get burnt in the SME IPO space. Okay,
got that. Important, comments coming in from there. But let's get in Ekta before we wind up to tell us all the top events we need to track for tomorrow. Ekta?
Well, yes, I'll start with the US CPI data from the global front, which is expected on the 12th of March. The US CPI data for the month of Feb will be the last data point when it comes to inflation ahead of the FOMC meet later on in the month. We also have the US Red Book Index as well as the US OPEC monthly market report. Now, coming back home, we have the CPI data for the month of Feb as well as the IIP data for the month of Jan, which will be released on the 12th of March post markets. And in terms of analyst meets, we have Godavari Power and Ispat, 3i Infotech, ICRA, IOL Chemicals, which will be holding some analyst meets, so do watch out for them.
Okay, all right. That is Ekta with all the events to watch. And with that, we are out of time on this edition of Markets Forward. We'll be back with more news and updates on the other side. Thank you for watching.